This is the Automotive Talent Show, hosted by Cameron Creswell, bringing you conversations with people shaping the automotive industry across Australia, New Zealand and beyond. Each episode explores career journeys, business stories and real insights into the market, the challenges, the shifts and what's happening on the ground right now. This is Automotive Talent. Let's begin.
Welcome back to the Automotive Talent Show podcast. Today's guest has spent 20 years in the finance office, business manager through to group business manager, before backing himself and founding Think Auto back in 2022. When it comes to F&I, he's seen it all. And today we're getting an honest, from the trenches take on why it's a tougher gig than it's ever been and its evolution moving forward. Anthony Maluccio, great to have you on, mate. Let's get into it. All right. Welcome to the Automotive Talent Show, Anthony Maluccio. Thanks for taking the time to have a session with me today, mate.
Thanks you, Cam. It's a pleasure joining you.
Yeah, I've been looking forward to this one, mate. I think, we're going to be covering off a lot of topics, but all really centered around the F&I part of the business, which is naturally a big talking point at the moment, which, always tends to happen when there's a pressure on things. All of a sudden, your areas like F&I and used cars and after sales always comes back into fashion of being top focus points, doesn't it? So appreciate you taking the time.
No, it's a pleasure. Nice joining you.
Good. So for those that don't know your story, take us back to the dawn of time, mate. How did the automotive industry enter your life?
Yeah, so I'm born to a migrant family. I was never meant to be in the automotive industry. My father was in retail. So I was sent off to school and I studied a Bachelor of Commerce, major in finance and commercial law. And I wanted to become an investment banker. I was really fascinated by financial markets. And one summer, I reckon it was 2005, I was on My Career at the time. Don't know whether that got consolidated. And I saw a job and it was finance and Mazda. And I thought, well, the finance is a big tick. And, Mazda, there was a lot of those on the road. And I think it was peak RX-8 Hero years. And I thought, here's a good opportunity for me to probably get a cheap car out of it. So, I applied for the job and, I was successful. Loved the job itself. I found it fascinating, the intricacies in, sales and finance. And, 21 years later, I'm still in it. I head up a vehicle procurement and finance business now in Think Auto. But it's not too dissimilar to the operations and the operating cadence of the dealership. So I landed in the automotive industry. I don't come from a typical sales background. It was, university, accounting and finance. So I had sometimes applied a different lens. And I think that lens was, sometimes it was refreshing, but other times it could be a little bit daunting for staff. Some staff probably found it harder to take and probably thought that I was more of a banking sort of guy. And I found a little bit of resistance at the beginning, but I think once you build those relationships and you start to help them, then that sort of broke through and, become part of the team. But yeah, definitely, you are definitely stigmatized for not being a quintessential car guy coming through the ranks. Well, that's my take anyway. So yeah, that's how I ended up in the automotive industry.
Yeah, absolutely. Well, the BM role in a dealership is unique, isn't it? And I think typically the people that get into F&I chairs come from the sales floor, right? So that's they come from the sales floor. They might have a bit of attention to detail and a love of numbers and those kind of things, and that helps them make that transition into the F&I chair pretty well. But I think anyone that comes from outside of that lens and landscape, their credibility is challenged, especially at the start, until they can prove themselves to be a safe pair of hands to give that customer to complete that final piece of the puzzle. And you have to prove your ability to do that every day.
Yeah, and that was my take, and that's what I found. But, like most workforces, you have politics and culture. And I think, most people have an uncanny ability to navigate through that with not much friction. And, I was no different and, made some fabulous relationships earlier on, gravitated to some of the senior boys as a mentor. I had one particular mentor back then that I really gravitated to. He sort of showed me the ropes and I sort of took over.
Yeah, that's the thing though, isn't it? You need good mentors to impart their experiences, their knowledge, That's why we're all different, I suppose, is because we have different mentors and different places at different times. So, that's what makes, I think, everyone unique from that point of view, because
Yeah, agree.
you benefit from all of those variables. I think the F&I part of it is an art form, isn't it? It's something that if you've never done it before, I think naturally it's very hard to appreciate the nuance, because you are that person that naturally generates a great outcome, whether that be, sale, arranging finance for cars, whether that's at a consumer level, whether it's at a commercial level. It's a skill set that naturally is very, I think the broader your skill set, the more successful you can be.
Yeah, I totally agree with that. And I think from my lens, there was almost a disconnect in, say, sales and finance as opposed to a natural flow. And you think about capital and debt markets, most people that walk into a dealership are financing a vehicle, whether it's borrowing from the future from their cash savings or whether it's an indirect borrowing through equity on a home loan. 100% of people, other than retirees, are financing their vehicles. And I think the understanding that, hey, the business manager is an integral part of this business who's either going to help settle some nerves when it comes to a budget or fight objections without the client needing to go external. That there setting expectations A for the sales team and B for the consumer is a massive, notwithstanding the fact that the F&I department that accounts for a significant part of a dealership's profitability. So there's this operating cadence that is important, A, from a relationship standpoint internally, and B, understanding that the mechanics of each transaction is capitalized on its merits.
Yeah, absolutely. Yeah. And in many ways, the success is derived from the smoothness of the handover between salesperson to F&I person, isn't it? Like
Yeah,
without that confident process, refined handover, it's a little bit like running a handicap race if it's not done well.
yeah, and we've got better at that with early introductions and some processes that see a double open or a double close with the F&I department. We've definitely progressed through that over time, and that's one key area that we may discuss further. But that's something that I've seen that we have done very, very well over time.
Yeah, absolutely. Yeah. And fair to say, just like the industry, the F&I part of dealership and retail operations has changed significantly in the last 20 years, hasn't it?
Oh, massively, yeah. It's been a huge, huge shift. The lens would be on compliance, and that is part of it. But the commercials, the offerings, the value, and to be more specific, we're at peak novated leasing loans at the moment. With the credits that are on offer there, the guaranteed future value, and what that's posed for the life cycle or the ownership and retention of a brand. Subvention, that's now creeping in at record speeds, and cashback and deposit contributions. A lot of these, I think Toyota back in the early days were one of the first to pioneer the subvention deal. But I just feel like it's another value add. It's important to consumers. It eliminates that uncertainty when it comes to borrowings, and yeah, it's definitely changed a lot since I started back in 2005.
Yeah, absolutely. Yeah, it's naturally a topic I think we'll get into, but it's such a competitive landscape, isn't it? And, I think the F&I desk now, as we said earlier, is under more pressure than it ever has been. It's one of those, I think the old paradigm, sales fixes everything, right? So when volumes are strong, inquiry's great, conversion's great, sales is always covered over things. But when the competition's heavy like it is at the moment, it's early July, so we've all just seen the results come out of June where we've hit a record month. But just because it's a record month, it doesn't mean it's a record story, is it? Like there's
No.
a lot of brands out there, and by way of retail, struggling to retain strong margin in deals that they're doing.
Yeah, I agree with that. And the COVID was a one in 100 or one in a lifetime opportunity that brought upon this fabulous opportunity for dealers. It was the river of gold of the 70s, so to speak. And now we're probably coming off from almost a contrasting effect that we're seeing this huge compression on margin, and finance now more than ever should be at the forefront. But we, seen huge changes with Chinese brands and their value. And you're right, there's a hero story in record sales, but I think it's a transition of vehicles that have been sold with the geopolitical tension, cost of living pressure, record household debt. A lot of buyers are looking for value, and these Chinese brands are really hard to argue against the value proposition. You've got, extended warranty periods. You've got a fabulous product engineering. You've got, creature comforts that you would none otherwise get in a luxury car. You've got brilliant finance offerings. So, the offer just keeps going and going. So I think a lot of the legacy OEMs would be looking at this and analyzing this, and this isn't new to them. I think prior to this big wave, a lot of the OEMs were doing deep research into what the effects would be on their business and their market share and profitability. So you are right. There are some really success stories for some. Some are doing it tough. Used car dealer groups would be doing it tougher than most. There is this sort of wedge between those quintessential used car buyers that would, rock up and buy a near new car, but they're transitioning to EVs because of the value and the rates that are offering. A
Yep.
used car rate typically attracts a higher cost because of the rate for risk scorecard. They can arrive at a new EV dealership and get it 0.88 or a 1% or a sub cash rate interest rate, and it's great value. They don't have to go through the organic scorecard where most of them are not asset backed. They're either new migrants or have new established or impaired credit cards. It's really shaking up the industry.
Mm. Yeah, absolutely. We shouldn't do a podcast on the subject without mentioning the C word of compliance. It's naturally something that is part of every day today more than ever in the F&I world. It's a touchy subject, which we'll get into, no doubt. But, compliance is always geared around administration and paperwork versus actually producing a result. So how are you seeing that landscape at the moment, Anthony?
Yeah, I've probably got a lucky lens because I can see both sides. The one being the point of sale exemption, which most dealerships run, and then from a brokerage standpoint with Think Auto, compliance is definitely, there's been an uptick in point of sale exemption. There's been an enormous wave in brokerage, but I think they're both fitting, in pursuit to best customer outcome. I think as we evolve, consumers do need to be protected. So I think that's always at the forefront. So far as it being onerous from a dealership standpoint, I don't know whether the shift in compliance has been overwhelming. I think the point of sale exemption still allows a business manager to have a really good operating cadence. Um, there are fundamentals of credit that need to be adhered to without reciting, the full NCCP. There are certain standards that need to be kept, but you can still keep them quite tight and run a very, very strong finance operation in the dealership. When it comes to brokerage, and I think the point of sale exemption is probably a godsend in a dealership, but when it comes to a brokerage, there are certain steps that you need to take. There are, notes that you have to write in why a loan is suitable. There's prelim assessments and credit guides and quotes that need to go out. The onus on a brokerage is a lot tougher. Along my years, I've seen some stoushes between the credit asset finance guys and the business managers where, the finance guys are a bit jaded that they don't have this similar point of sale, especially when they're selling new cars. But yeah, it's definitely,
Yes.
compliance. I'm all for compliance, best customer outcome. We need to build trust and transparency in what we do. And the more transparent we are, believe it or not, the better the outcome becomes.
Yeah, absolutely. I think it's like any relationship, isn't it? There's the more transparent, the better the trust. The better the trust, the better the outcome. Naturally, a byproduct of that.
Mhm.
Do you see technology playing a big part in that piece? We're in the world of tech, AI and everything else that comes along with it. Do you see technology really, obviously with checks and balances aiding to that compliance side?
Yeah, I do. I really do. And we've seen a bit of that over the last decade with, green IDing and alien bank statements that get through and vetted. AI is reading pay slips. So I think from a not only compliance, but from a fraud perspective, that's certainly going to help. And that's then going to feed through to the bottom line because less losses increases the appetite for the financier to drive a cheaper rate. And so I think there's definitely value had there. But yeah, AI and technologies will definitely propel that piece. There are some non-automated responses. You really still need to understand the client, get to know your client. Is the loan suitable? And the term is not unsuitable. So you still need to ensure that you're acting responsibly. But I think a lot of that can be fast tracked and it's sequenced in a dealership setting. And even up until this year, some dealerships are still using manual privacy consent forms. Some financiers don't even support DocuSign. In 2026, we've got tech stocks that are, the top five are harboring $10 trillion in the States as a market cap. In 2026, it fathoms me that we're still getting manual privacy consent forms and we're still having to upload contracts into a DocuSign. All of that can be automated and that just makes for a better frictionless transaction with the consumer. And I think that really is where if it's not already there, it needs to be there. And then we'll progress further along, I believe. So, yeah, compliance will definitely be aided by technology, and I think it'll get us to a far better place as well.
Yeah, 100% agree. I think it depends on the organization's focus and what they prioritize, which determines, I suppose, the use of technology. I recall walking into a dealership only, I'd like to say 5 years ago, but it was probably 10 years ago now. They were still using carbon triplicate sale contracts,
You're kidding.
press hard, sign here. No, I'm not kidding. I'd say it'd be somewhere between 5 and 10 years ago. And thankfully that business has changed thinking now. But, it's amazing how we're all unique and some of us embrace technology and others push back against change. I think COVID maybe actually helped us get more comfortable with changing and adapting to new ways. If that's the greatest outcome of COVID, then that's not a bad way.
No, but I can't begrudge. I've seen both sides of businesses, those that are chasing tech first and, spending more to make more. And I do see, dealer groups that are really wanting to, preserve capital. If the operations are sound, why if it's not broke, why fix it? And to go and spend $1 million on new technologies to potentially sell more cars, I don't know whether some of them can do that analysis. So I don't begrudge a business, but adaptability is everything. And for those businesses that probably haven't, I'd assume that they probably will get left behind in time.
Yeah, absolutely. The customer has changed a fair bit. If you think about the stereotypical customer that interacts with the dealership or interacts with yourself, they're there to make an arrangement. So that paradigm hasn't changed, but their education, their expectation has changed, hasn't it, over the journey? Has that really been something that you've seen evolved over the journey?
Yeah, it has, and it has for the better. And with, new technologies, being the internet, Google, the information that they have, and now with, AI models, that they are coming equipped more than ever. But with more information becomes more fragmentation and a bit more confusion. So I think, yes, dealer consumers are more equipped now with information. There are really strong platforms like CanStar and other, choice.com, these forums that provide more information than ever. You've got, Reddit and other Discord groups, Facebook forums where people are learning off peer and gaining social proof that way. But when it comes to the actual sale, you are still selling the same product and you are still selling trust and convenience. You're also offering a solution to their problem. And when you join part of that process and building something that meets their needs and objectives in my case, buying or financing a motor vehicle, then a lot of that is simplified into that transaction itself. But yeah, it is more fragmented. There are more asset brokers now than there've ever been. There are some consumers will see a low rate advertisement online and think it's carte blanche. Every brand in the industry is offering 0% or innovated lease is the way to go because everybody's doing it because their peers are doing it. So over my time, there's a lot of factors that are compressing the opportunity and compressing the margin. So yeah, it's definitely harder now than it has ever been.
Yeah, I agree. And I think, but also to your point, the same benefit can be there through educating the individual customer on their individual circumstance, right? Like it might be that, as you say, you see, I suppose it's a little bit like back in the day, the good old loss leading advertising, here's this car, it's got this price on it for this weekend, which, encourages someone to interact that additional piece, but then it's up to the organisation and the salesperson to educate the customer as to why that car might be or might not be the best option for them out of
Yeah,
their whole
yeah.
life. And yeah, that's I think ultimately financing a vehicle is a significant decision someone makes. They don't do it every day, and to be more comfortable to be able to execute, they need to be educated on the advantages and disadvantages of each option that they have. That's where something that technology won't come in. It needs
No.
a personal people intervention to be able to facilitate it.
I think the cost of living, we've touched on that, and that's a hot topic, and it will always be a hot topic because it's the system by design. Clients are looking for the best value and the best outcome. They are looking for social proof. It's not unusual for us to get, hey, my mate got 7 or 8 or 9, whatever the percentage might be, and that customer on paper just does not qualify. And trying to work through and being transparent, explaining to them how the actual system works, explaining to them how they actually score and why they score, that can settle some nerves. It can build trust, and it helps with the outcome.
Yeah, absolutely. Yeah. And it's a competitive space, isn't it? Dealerships are competing in a pretty broad market now. So what are you seeing to be the best practice as far as having that right service offering for customers that interact with dealerships or even brokers for that matter?
Well, I think it starts from an operating. I keep coming back to this operating rhythm or cadence. I think the quote to sales to get to the opportunity, because you think about typical closing ratios, 1 in 4 will buy. What happens to the other 3? Now, earlier on, we mentioned that, hey, nearly 100% of customers finance. Why don't we ever quote to them the 3 and 4 that don't buy? Why don't we have an F&I that's selling to them? And why can't we finance potentially another car from another dealership that they may be buying? And look, that's the premise of where Think Auto was born, and that's going back way when. But look, I think the cadence, the early introductions, the quote to sales ratio should be a non-negotiable. You should be quoting every single customer that walks in your door. A typical get out at a dealership's $1 million divided by the lead rate. You're talking about $1,000 per person that touches the dealership. In some instances, it could be more. Why aren't we quoting them something? Because what we do know is they are in the market to buy a car. On top of that, we know that novated leasings are at record levels. We need to offer those. Dealership would have to have a mechanism in place that they're offering novated leasing. Now, they're not going to be able to win all because we know that some employers have fixed arrangements with some providers, but there are small SME opportunities that can be had, and that space, not to the point of a profitability because we talked about best customer outcomes, but it is an unregulated space, and that unregulated space means that the transaction can be a little more fluid and faster paced, and probably not get bogged down by the same compliance piece that we spoke about earlier as well. So I think having those tools in your repertoire, a good business can't change the variable marketing options that an OEM puts out. So
Yeah, absolutely. Yeah. And something you touched on earlier with the current market, there's been a strong uptake in Chinese product. It's kicking big goals. A lot of that product is centered around EV and hybrid as well, but EV is a strong proportion of it. I think where it comes to finance, I think Steve Bragg actually brought up in a previous episode about not necessarily the first or second owner of that EV vehicle, but the third and fourth owner. And then how does that change the finance conversation? Because it's still a little bit of an unknown. Like, yes, these EVs are lasting longer and the batteries are lasting longer, and the cost of repairing a battery is astronomical, which pretty much makes
car redundant.
the car itself unviable. That relates very strongly to a finance offer, doesn't it? Because will a finance company finance that vehicle to its fourth or fifth owner, depending, or how do you see that sort of planning out from what you can see?
I think the market will adapt. To your point about these cars, I think the car park itself will shift, and I think our car park in Australia will have a mean age that's newer. I think a lot of these cars, you look at Japan with grey imports, I don't think we'll get to that point, but I think you'll see newer cars and gradually that car park becoming newer. I think the turnover rate will become greater. That's one of the biggest unknowns with these offers, whether it be guaranteed future value or a subvention deal. And the OEM and the financier is taking a punt because we touched about the scorecard and that it's probably not priced in to that rate. You know, you could have a 0.88 or a 1 or a 3%, whatever it is, a sub cash rate offering en masse provided to a profile that the minute there's a bit of delinquency or losses start to creep, then that's one side. But they've also got security of a car that they really don't know what the residual values will be. So they've got this risky book of clients that aren't priced in to their true profile, and then they've got a vehicle on the other side that they don't understand the depreciation effects. And we've moved from industrial revolution to technical revolution. Cars are really now iPads on wheels. So I think the turn rate on a car
Yeah.
won't be 3.5 years. I think it'll be sooner than that. And with immigration set to peak at 30 million by 2030, I just think that flywheel will keep turning more quickly. So I think there'll be more Chinese cars, to your point. I think there'll be a little more uncertainty through residual values, and that's a risk for financiers. And that burden ultimately will get borne by everybody. If the financiers costs creep on delinquencies and losses, then that's going to feed through to floor plan and retail funding. But it's an interesting space. Cars should, through economies of scale, now that we're 6 years out of COVID, that was really the peak price point. I think a lot of OEMs
Yes.
are now normalizing you'll see incentives almost up to 20% on some brands. They're now starting to normalize those prices. I think cars will become cheaper. That resale residual risk won't be as great, but it is real. It absolutely is real.
Yeah. Yeah, absolutely. Yeah. And it'll be one of those pieces that time will only tell whether how it all shakes out. Because I think predicting the future, well, I don't think anyone would have predicted some of the big touch points in the last 5 years, and it all affects business, fair to say.
It's remarkable to your point. I just want to touch on that, Cam. It's remarkable from my side that the automotive had one of the largest barriers to entry, and now you have the Chinese that are coming in en masse, and it's really a product of their population and their scale that they're able to do so. And it's a testament to them that they're able to build and engineer a product so good. And it is not only a threat to the Australian market, and when I say threat, in a good way, it's providing an opportunity to consumers. The threat is really for those OEMs that can't or don't adapt. I don't think that they'll have a long future in the Australian automotive market.
Yeah. Yeah, absolutely. What the data is saying that, at the end of the day, there's new brand startups seems to have every other week at the moment. But, we're still only on track to be a 1.2 million car business, aren't we? It just dilutes the pool and the strong will remain strong with less market share. But the ones that have been fringing at the lower end of the scale will find it very hard to justify the reasons for putting cars on boats and sending them to this part of the world.
Now that number you've touched on, the 1.2, it really hasn't moved, right? When you index that to immigration and population growth, all it is, what up to now, 68 car brands. It's just a shuffling of market share. And it's to your point, it's interesting to see where that goes.
Yeah, absolutely. And the business manager role, if we jumped in a time machine and went back to 10 years, business managers, although functionality-wise were the same, it was a different feel, wasn't it, back then? But what do you think makes a great BM stand out today? What kind of things do you see as far as being the substance of a good business manager?
Yeah, I put it down to a business manager or an individual that's curious. They want to learn about the industry and they want to understand the fine mechanics in how a department is important in the overall workings of that dealership. Someone that listens to the customer, not just dictating. So I think curiosity is something that I look for when I was hiring, and someone that was, attentive to a customer's needs. Like all business, you really have to have this relentless drive to want to help and to get involved in every single transaction. We measure penetration and it's a hindsight report. In reality, it's an in-flight measure because you have X amount of inquiries every single day and you either win or lose on those opportunities. So it's a good business manager is one that understands that rhythm, is documenting that rhythm in real time, not waiting for the end of month to hindsight the measure. Those metrics are really measured. And when I was a group business manager, that's something that I would measure in real time. We wouldn't be waiting to end the month. We would see on the day what the penetration rate was. We would go back and we would hindsight where we left money on the table. So opportunity foregone, what was the opportunity cost, staffing levels. We would look at it all. And that's a real time metric. And that would result in a 35, 40, 45% penetration. Now, unfortunately, I didn't have any of these GFE programs. So to have that sort of run rate on, high performance and high profitability, that's what I see. But the job isn't profitability alone. I think it's understanding the client's needs, understanding what's expected of you from a compliance and a presentation standpoint, because you are presenting the dealership, you are representing the financier. So I think a business manager that understands all of that would make a really rewarding career out of, being in finance in a dealership.
Yeah, absolutely. Yeah. I think that's the thing, the way we think about the front end of the business, what everyone refers to as the front end, sales, finance, aftercare. We see it as being the front end or the sales part of the business, don't we?
Mm,
Where the reality is, I believe, it's more of a service part of the business. We're providing service. We're providing options where the salesperson didn't create that vehicle. They're facilitating a customer into that vehicle. And same with
mm.
the finance, same with aftercare. I don't know. Is there any merit to that thinking, or what are your thoughts to that?
Oh, it's hard because I am, I'm all in on finance. So for mine, it was finance is the business, because without finance, you're not beating objections, you're not closing out deals, you're then not having a finance book that can have retention and it can be mined over the life cycle journey, reappointed in 3 years. There can be a balloon refinance. I do believe it's a very, very integral part. To your point of being sales or service, I think it's both. I think a dealership cannot operate without its function from a sales perspective. And I think it's got all of the attributes in being a service, being viewed as a service function as well. So yeah, I am very
Yeah.
bullish because I've always been in finance. So forgive my bias, but it's a very important part. And I think since COVID, and COVID was awesome for new car sales and the gross that was there. I think finance somewhat got pushed aside. I think it is an important integral part of a dealership's profitability. Return on sales is very low. It's, at best it was, 1%. That probably quadrupled through COVID. So we're now back to almost normal levels. And these add-on, whether it be the finance department or the aftermarket department, especially service and parts and absorption, they are more critical now than they ever have been.
Yeah, absolutely. I suppose my point is, I know obviously there's a sales element to it, but the sales element side of it is recognition of the service potentially that's been provided, if you know
Yeah,
what I
of
mean. Like
course.
it's not
Yeah,
like,
of course.
it's
Yeah.
it's not like you hold a gun to someone's head and say, you must do a paint protection and you must do finance through us and all the rest of it. But if you generate the right conversation, then it's providing a service that naturally will lead to that part. But
Yeah,
yeah,
and you are right. And something I wanted to add, that when you mention the finance person to the consumer, there's either two responses that say, well, I don't need finance, or, why are you sending me there? Or there's this big relief. This wall has come down, that it's not this hard sell, you versus me, trying to get me to buy this car. And that client is more relaxed. They divulge into some of their finances when you're doing a capacity assessment, and you are building trust on an entire different level. And that trust has sometimes been the benefit of a close from the finance department to the surprise of the sales team. So from a service standpoint, absolutely, I think it screams service when you look at it from that lens.
yeah, yeah, absolutely. And you brought up a good point. COVID did kind of shift priorities a little bit. It wasn't that long before COVID that the F&I function was obviously getting very heavily scrutinized by regulators around flex and all the rest of it. So do you think it's still recovering from both of those sort of significant stages in the F&I life? Do you think that's still going on even today?
Yeah, I do, and I think the flex prohibition it was probably a little more daunting, the fear of it, than it was. But it definitely displaced a lot of business managers, a lot of those high selling business managers that would, I wouldn't say prey, but were really taking advantage of high flex positions, because that was the commercial reality prior to flex. So to ban 2% on commercial, definitely impaired the profitability. We did see, some changes around insurance and the add-on insurance landscape there. That almost become non-existent. There are some really good add-ons in, some warranty products and comprehensive motor vehicle insurance. There's some fabulous offerings on the market, but yeah, there's definitely been a enormous shift.
Predicting the future is a fool's game sometimes, but do you see the future of the F&I desk resembling anything from the past, or do you see 5 years from now being something that is unrecognizable? Where do you see it evolving to, do you think?
Yeah, it's an interesting question. It depends on the offerings of the OEM. We've talked about subvention deals on mass. There's not a lot of sales acumen that needs to go into that. It's a procedural, application, send it up, the rate is fixed, and the fees are fixed. If we get more of that, then I certainly believe that that can be integrated through technology and through certain hubs that OEMs or financiers will build. I think we've got to be careful, and I think it's the dealers and the OEMs that need to work hand in hand, noting that, the finance is an integral part of profitability. I think it's important for OEMs to help the dealer network protect that. Um, Especially with margin compression and the threat that a lot of legacy OEMs are under. So I think that they should be working in real time, building solutions. I think 5 years from now, a lot of the process will definitely be automated. That'll be APIing from a digital sense directly to the financier. The financier is currently automating their processes. So in theory, that should get an instant approval, income ticked off, which it's already doing from an AI perspective, but real time settlement. So same day real settlement in a digital sense. So yeah, it just depends, Cam, where this goes. And I think if I was a dealer, I'd be really leaning on the OEM to build out a program that supports finance in a dealership. But then again, these legacy OEMs are, very busy at the moment figuring out how they're going to survive over the next 5 to 10 years. I'm not saying that's a fearmonger or to be diabolical, but if legacy OEM is not profitable, then the capital won't follow. People will invest their money in areas that they will get a far better return. So it's ever so important now that these OEMs are, getting into a profitability zone to attract capital, because if there's no capital to grow, it'll be debt, and debt requires, unbelievable revenue. The deeper you get from a, debt to equity ratio, the less attractive you are to an investor. And then I think that you've got a higher likelihood of toppling over at that point. It's very hard to predict 5 or 10 years. AI will wreak havoc over the next 2 or 3. I can see that. And yeah, I just think dealer groups need to protect what they've got. And it's not only F&I, it's the aftercare. And what does that do to a dealership? It's the absorption and fixed operations. And, you talk about an EV company that has a battery that, someone will look at it in 2 years, take a quick glance, tick it off from a service standpoint. Like, that revenue is gone from fixed operations. We're seeing direct to sales models, agency models that's taking away already some of the liberties that dealer groups once had. So, in 5 years, if that becomes deeper, if we see consolidation of groups, it's really hard for me to predict. But what do you think, Cam?
Oh, I think naturally it's an evolution, isn't it? You're seeing some brands transition from franchise to agency. Some it's worked really well. Others, majority of them hasn't. It's been a challenge naturally to migrate the expectations of not only the partners that they have out there in the retail network, but also customers as well. I think, to your point, the ownership model is kind of like, as far as the consumer ownership model is changing with the advent of more leasing and guaranteed future value, and the technology in these vehicles is changing. So, but I think all in all, one thing that has remained the same is that the consumer out there, the people, that the end user of these vehicles still need people to interact with when they're making a buying decision or a finance decision or,
Absolutely,
you
yeah.
know, a decision on. And the relationship piece is still the strongest piece of the strongest variable and determination of success or compromise when it comes to delivering on an outcome. Hopefully that's the case, because my business naturally revolves around people. So hopefully
People.
you and I won't be replaced by robots anytime soon, Anthony.
Yeah, I don't think it'll be robots. I think where this is nuanced is it's those that adapt to those tools will decouple themselves from the ones that don't. I think those that are adopting AI will have better scripts. They'll be learning more about cars. They'll be applying, whether it be an open agent or a claw, they'll be deploying their own systems, whether it be follow-ups or whatever that might be. I think those that embrace and adapt to the technology. But yeah, to your point, people will still be needed. This is a high involvement decision. It's second to buying a home. Social proof is real. People get novated leases because their friend told them to. They have no idea about the fine mechanics of or the tax savings. They get one because their friend told them that it's great, or someone's gone to a business because someone's told them that it got a 5-star review. So I think we as people naturally will look for social proof, but I think in the evolution through technology, those that adapt and embrace it will stand out to those that don't.
Yeah, absolutely. So tell us about Think Auto, mate. You've migrated out of traditional dealer land and started Think Auto many moons ago. So yeah, how have you seen the evolution of Think Auto carry out over the journey?
Yeah, Think Auto is an interesting one. The concept of Think Auto dates back to 2008. So sitting in a chair, I talked about the opportunity cost, 1 in 4. It always fascinated me. What happens to the 3 in 4 that don't buy? Just, you'd get a phone call for people that wanted to buy a car. And, I thought, hang on, there's probably a real commercial case here. And I didn't do much with it at the time. And I continued on my merry way and my progression through the finance world. And COVID hit, and I was in a fortunate enough position that I was able to fund a business like Think Auto, and I took on that business, and it takes very much the same view of a dealership. It's interesting. It has a little a different rhythm because we don't have one set brand, and we're not helping a similar profile client. So it could be trying to source a used vehicle or helping a client get a better outcome on a new vehicle. And then finance becomes the natural progression through that, through the finance brokerage. But it was something that I always wanted to do, a bug I had to itch. And, it's been with me for, 13, 14 years prior to going live. And, I've really enjoyed it. I'm still in the space that I love. I've always loved automotive. I've still got more passion now than I ever had and never have. And yeah, I like this new chapter in Think Auto and what it's been able to provide for me. So yeah, that's sort of my takes. There's been a big wave of movement in this space in the US. There's lots of buyer platforms or broker led sales, and I think Australia post COVID and probably post flex prohibition saw business managers go into their own brokerages. Those business managers were used to closing deals. They were looking for the car sale that they didn't have. They weren't ones to buy leads, and they thought, hang on, how can I sort of mind my own car? We need to start with a car. And that's sort of the premise that most had sort of taken. So I think Auto just falls into that movement.
Yeah, yeah, absolutely. But that's like anything, isn't it? You got to keep evolving and listening to what your customers are telling you through their behaviors and coming up with solutions that that naturally service the needs. And the time that you stop listening to it is the time that you stop evolving, and therefore you might become a Kodak or something that's no longer relevant. And where do you see Think Auto evolving into the next 5 years? You're a progressive type of person, mate. You're always looking towards the future. Where do you see that evolution, and what are you investing in now to keep ahead of the curve?
Yeah, so investing in a lot of technologies, and some of those that we've touched on, to make it a seamless transaction. But my focus now is to scale Think Auto and its presence, I guess, in the Australian marketplace. It is a fabulous buying platform. If it be Think Auto or another like brand that you have someone with the experience, the know-how. There are a lot of people out there that don't have the time, patience, or know-how that are walking that process alone. And there is, asymmetry of information. And, it's good if you've got that information, but where a consumer doesn't, it can not always end up in the best customer outcome. But, I really want to scale that business, and that business really scales in sales and finance. And there are some other technologies that I'm working on that will help enable that. So yeah, I think it's an interesting time. See a lot of movement with data and OEMs and integrations and sales platforms. What does a marketplace look like in 5 years' time with the emergence of AI? What does asymmetric information mean with AI when you can get that information at a quick search? So do believe it's going to be an interesting time. It's going to be exponential growth, I feel, for those that adapt over the next 5 years. But that's really the plan for Think Auto. It's just more of the same, but in a more efficient manner.
Yep. Yeah. Yeah, I think that's the benefit of the technology that we have at the time, that we have right now, isn't it? Anyone that's actually put their toe in the water or jumped in has realized that the biggest benefit is the efficiency that it can bring. It can free someone up to focus on the stuff that only that individual can do, rather than the stuff that, is deemed to be menial
Yeah, and
and less
I think
productive.
think to your point, Cam, is it needs to be done tastefully and sparingly. I don't think markets are going to overnight become AI. To your point, you're in the people's business, and I think it needs to be used sparingly. A lot of dealer groups, for example, will go back. A lot of these platforms are legacy platforms. They're 20, 30-year old. Some of these systems don't even speak to each other. Some of these systems don't even have an API
Some of them, a
into
lot
each
of
other.
them. Yeah, yeah, yeah,
So trying to
yeah,
re-engineer the enormous cost, and then you talk about burn rate, right? To chat costs money. So how far does a dealer group go to deploy chat, or how far does every call is a burn, and every burn costs money. So you talked about your dealer that didn't want to transition from, your carbon copy to where we are today. And that's probably the cost to benefit analysis most dealerships. How much do we invest, and what's really our return? And for the quintessential dealership, I'm not sure whether, and I'm not sure how they're going to actually deploy, other than possibly scanning the net for good cars to buy and bring in as used car stock, or follow up and life cycle relationship follow ups. But most of those relationship follow ups, they want to hear a voice. The question is, is voice AI something that I don't like it. I don't like getting a call from an AI assistant or a voice AI. I just hang up. I can't resonate with that. But yeah.
yeah.
What do you think?
I think that part of the technology piece is going to play a part to increase that. You look at things like voice AI, for example, doing the reception work. It replaces doing service appointments and having a chatbot online where it feels like a chatbot. Like it's doing that lead-in work to end up to a point where you get to either a human interaction, or whether you get to a resolution of making that appointment. So, but at the end of the day, I think, that's where it's going. I think, as you say, the technology of having it being, the saying has been around for ages of data being commodity and being king. You look at how, some DMS operators, for example, are very restrictive. They don't allow other things to integrate and bolt on and communicate, because that in turn kind of lessens their value. I think technology working together is probably one of the biggest challenges that automotive retail is facing, for sure. If you were out there, a group BM, you were hired, you were hiring a young gun mate as a person to sit on a finance desk today. What advice would you give that new entry person today? What would you say would be the most valuable piece of advice you could give them?
Yeah, curiosity is the biggest one. Patience. I think patience is an important piece. the role has a stigma of being a high performance, high rewarding role. And I think that comes in time. So I think patience is an important piece. Be tenacious, ask questions. I talk about being curious. It's going to ruffle some feathers. Some people are going to want to know why you're asking those questions, but it's really understanding the job in itself. There are so many factors that lead in. Automotive is so unique in that you've got a retail arm, you've got a finance arm, you've got an aftermarket arm, a service arm, retention arm. Like it's probably one of the only businesses that probably doesn't stand up for the core reason it's in existence. So be curious, be tenacious, build strong relationships. Your relationships, you're with these people more than your own families at times. This is your new family. Respect your peers, build relationship with your peers, and that will help with the success of the role itself. And an example of that is those that lunch together are likely going to be closing together. Your mate's going to give you a nice soft intro, and he's going to want you, or he or she's going to want you to win on that transaction as a joint effort through your friendship. So, look, that would be my advice. Keep learning. Every day I become redundant because tomorrow there's something new. I think you talked about your data. Tomorrow that data is irrelevant because we didn't have EV data 2 years ago. We didn't have that depreciation data 3 years ago. Just keep learning. Every day you learn something is a tick in your repertoire. So I hope,
100%.
look, without giving you too much words of wisdom, I hope that's enough to spark you along.
Yep, absolutely. I think it's worked very well, and be present. Sometimes I think in my experience, the BMs get out there and they're amongst their team, they're amongst their people, might help even doing a yard change and doing those kind of things. At the end of the day, although we reward individually when it comes to the financial side of it, the best environments are the ones that work as a team function.
Yep, totally agree.
Yeah. So how do people find you, mate? How do they connect with you? Whether they're looking for a bit of advice or looking for finance or looking to get styling tips. How does someone connect with you, Anthony, these days?
Not sure about the styling tips, but yeah, I'm active on LinkedIn. My mobile number's pretty easy to find. I think if you type my name in on Google, I'm always happy to have a chat. I love this industry. I think it's infectious. It's been very rewarding to me, and I know that it's been very rewarding to a lot. Turnover is high, and the only way to combat turnover is, to try and settle yourself into a role and try and fully understand it. And that's why I talk about patience. I'm going off topic here, but you should be able to find me on LinkedIn, Think Auto. I do have that digital presence. So look, always happy to connect, have a coffee with anyone that reaches out.
Absolutely. We'll put your LinkedIn contact details into the show notes. So if anyone wants to reach out and connect with you directly on LinkedIn, then feel free to do so. And
thanks, Cam.
You'll get just as much value. You'll get just as much value out of Anthony, no doubt, as what we've got out of him today. So appreciate your time, mate. Thanks very much for being a part of the podcast.
No problems. Thanks, Cam. Appreciate it.
Good on you, mate.
You take care. One. Bye now. Cheers.
You've been listening to the Automotive Talent Show, where career stories, business journeys, and market insights come together from across the automotive industry. If you found value in this episode, follow the show and share it with someone in the industry. To learn more or connect with Cameron, search Automotive Talent on LinkedIn or visit automotivetalent.com.au. Thanks for listening. We'll see you next time.